Hello and welcome to my stock review video. Today we will be reviewing SHEL, stock ticker SHEL. If this video does well, I'll continue to do stock reviews either once or twice a week. If you have a stock you would like a second set of eyes on, please drop it in the comments. As always, this is not financial advice, simply my viewpoint of a stock based off of facts from different websites. You should not copy or invest in stocks without doing your own research first. As always, your capital is at risk if you choose to invest in the stock market. The company operates through 5 primary divisions: upstream and integrated gas, focusing on the exploration and extraction of crude oil and natural gas, including the production of liquefied natural gas, LNG. Marketing, providing fuels, lubricants, and convenience retail for various sectors, including agriculture, construction, and transport. Chemicals and products, manufacturing essential chemicals, like ethylene and propylene, and refining crude oil into industrial and household products. Renewables and energy solutions, investing in wind and solar power, hydrogen production, and carbon capture technologies. Key operations and innovations, traditional energy, managing extensive infrastructure for oil sands, pipelines, and global trading of oil and petrochemicals. Future energy, expanding into electric vehicle, EV, charging, sustainable aviation fuel, SAF, and LNG-fueled heavy-duty trucking. Environmental services, developing commercial carbon capture hubs and managing nature-based carbon credits. As you can see, SHEL is very diversified across the energy sector with multiple ongoing projects including renewables. Now let's move on to the background facts and figures. SHEL was founded in 1897 as the company we see today. But did you know SHEL originated out of London in 1833, where the founder Marcus Samuel was selling decorative seashell out of his London-based store? It wasn't until 1897 when his son took over the business and expanded into the oil and gas sector. Then in 1907 SHEL and Royal Dutch Roots combined to make Royal Dutch Shell, which later changed its name to SHEL plc in 2022. Currently, SHEL is one of the largest companies in the energy sector with a market cap of £153.5 billion, and it appears they are continuing to grow year on year with a year-to-date growth figure of just under 8%, with multiple global analysts estimating the share price is still at least 50% under its fair value rating. We now move on to my second favorite part of stock analysis: the financials. SHEL's balance sheet shows a healthy cushion between what it owns and what it owes, with $121.18 billion in short-term assets against $89.62 billion in short-term liabilities. The company possesses a strong current ratio, meaning it can easily cover its immediate obligations. The company holds $256.56 billion in long-term assets, more than doubling its long-term liabilities of $110.30 billion. SHEL maintains a substantial cash position of $33.05 billion, providing a buffer for investments or economic volatility. SHEL operates in an extremely crowded arena, facing off against the world's most powerful energy giants. These competitors generally fall into 3 categories. The American super companies, ExxonMobil and Chevron, are SHEL's fiercest rivals. In 2026, they are often seen as the more traditional choice for investors because they have doubled down on oil and gas production, while SHEL has spent more on diversifying into green energy. The European peers, companies like BP and Total Energies, follow a similar path to SHEL. They are all racing to transition from big oil to big energy by investing heavily in wind, solar, and electric vehicle charging. While BP often offers a higher dividend yield, SHEL is currently noted for being more efficient and leaner. The state-owned titans, Saudi Aramco, is the elephant in the room. As a state-owned giant, it has lower production costs and massive reserves that private companies like SHEL simply can't match. While SHEL is the world leader in liquefied natural gas, LNG, it is currently in a tug-of-war with US competitors. American firms are winning on pure stock growth, but SHEL is betting that its global network of 46,000 service stations and green energy pivot will make it the winner of the next decade. Are you holding any energy companies? If so, drop them in the comments below. This is now my favorite part of a review: the dividend breakdown. SHEL continues to be a cornerstone for income seekers, posting a 2025 total dividend of £1.07 per share. The company maintains a sustainable payout ratio of 59%, striking a healthy balance between rewarding shareholders and reinvesting in operations. Currently sitting at a 3.8% yield with quarterly distributions, it's a consistent performer for UK investors, especially given the 0% withholding tax. If you're looking to capture the next payment of 27 pence per share, make sure you're on the books before the ex-dividend date on February 19, 2026, for the payday on March 30th. This is another very interesting part of company research, who the majority shareholders are. SHEL is a textbook example of an institutionally dominated stock. While it's a household name, the vast majority of the company is held by professional asset managers rather than individual insiders. The top of the pyramid is dominated by global financial giants who hold billions of pounds worth of shares. BlackRock, the world's largest asset manager, leads the pack with an 8.26% stake worth approximately £12.7 billion. Vanguard Group, following closely with 5.44% worth approximately £8.4 billion. FMR holds a significant 3.57% worth approximately £5.5 billion. Norges Bank, the Norwegian sovereign wealth fund, is also a key player with 2.42% worth approximately £3.7 billion. When you invest in SHEL, you're sitting at the same table as the world's biggest fund managers. With nearly 68% of the company owned by institutions like BlackRock and Vanguard, the stock is heavily influenced by big money sentiment. Interestingly, insider ownership is tiny, 0.01%, which is common for a company this size, but it means the board's interests are strictly aligned with keeping those big institutional shareholders happy through dividends and buybacks. Thanks so much for sticking around for this deep dive into SHEL. Whether you're a long-term income investor or just looking to understand the mechanics of one of the UK's biggest blue-chip stocks, I hope these dividend and ownership breakdowns helped clear things up. If you found value in this review, don't forget to hit that like button and subscribe for more stock analysis. I'd love to hear your thoughts in the comments. Are you holding SHEL in your portfolio for 2026, or are you looking elsewhere? Thanks for watching, and I'll see you in the next one.